22%, 25.5%, and 34.7%. That's how far the Dow Jones Industrial Average, the S&P 500, and the NASDAQ, respectively, that's how far each of them are down since their market highs at the end of last year, beginning of 2022. And this past week was a doozy as we had some big selling, and it looks like we're gearing up for some more next week. What is to come? Are we going to have another chance to get out at some higher highs here? What is going to happen with the market? Join me for this market update for October 3rd, 2022. Let's go. Hello, everybody. It is Jeremy Whaley here from Trade Maestro. I hope you're all having a fantastic week and a great weekend, depending on when you're watching this. I'm putting this out on Saturday morning, so you have a couple days to watch this for Monday's actual trading session, which will be on October the 3rd. And I think it could be a very interesting trading session. We'll have to see. But we're going to do a little bit of a market update here. We talked about this earlier in the week. I did a market update, sent that out. I'm not going to go as in depth as I did for that update. In fact, I have a couple of different things to show you in this update that we didn't look at earlier in the week. And if you want to go back and look at the earlier update, it's still posted on my YouTube channel. You can go back and check that out. So let's get over here and take a look at the market, see what's going on here. And what you're going to see, before I go too far here, let me just kind of explain this to you. You're actually looking at some different indicators. On the bottom here is an indicator that I've created based on some other stuff that we've been working on. I'm calling it the JMAC because of my name, obviously. But this indicator is very unique. It's a different way of presenting some information related to moving averages and turning it into an oscillator. And I think there's some interesting signals that are worth looking at here. Before I get into it, let me just kind of do a little bit of update on the price action itself. If you can see this on the chart, bottom right corner here. Uh-oh, I went the wrong way. Sorry, let's scale this the right way. You can see the Dow Jones Industrial Average closed below our support level today on Friday. I'm recording this on Friday evening. And it did so after giving us a continuation pattern. That's a little stair step right there. For those of you who don't know what a continuation pattern is, it's a type of a chart pattern that suggests that the trend is going to be continuing. And sure enough, on Friday, we did continue. It happened late in the day. If I were to take a look at the intraday chart, which maybe we'll look at later. I don't want to go there right now. But if we looked at the intraday chart, you would see that it was all in the afternoon. Early in the day, it was actually up a little bit. And late in the day, all the selling came in. We closed over 500 points down on the Dow Jones as we continue to tick down. Now, what I want to show you as I zoom out just a little bit here, this is just a continuation of the trends that we've been talking about. Like I said, I did an update earlier in the week where we talked about kind of all the different phases here. What I want to focus on is what's happening right here, and specifically these signals that we're getting from the JMAC indicator down here, which are very unique. And I was just looking before I started the video and kind of noticed some unique observations here that I think are worth noting. So the thing to note here, if I were to give you something positive, the thing to note would be we're very oversold, and this JMAC actually just turned light red, light pink, whatever color you want to call that, which does indicate typically that we're going to have some sort of a sideways move or a little bit of a bounce. So if you look back to September here, you'll notice we had 4 days where the market actually went higher, and our JMAC had indicated that was about to happen. Well, we got that signal today with a downtick. Okay, so that's kind of unique. And what it does suggest is it suggests in the short term that maybe what we would see as we move into October 3rd and 4th, what we would see is maybe some bullish candles coming in, possibly coming all the way back up here to around 30,000. So that's not a big move, but maybe getting all the way back up there. More likely, probably what we would see is just sideways move, just kind of, hanging around here about this 29,000 level as we build another stair step probably in this pattern. And if that happened, then you would see your JMAC getting shorter and shorter here until it breaks bearish, and then you'll see the dark red coming back in, and it would look like a continuation signal just like that right there that I circled on the screen. So that's what I think is probably going to happen in the very, very short term, although I do have reasons to believe that that may be too optimistic. I want to actually pull this over to a weekly chart, which I don't do very often, but I noticed a couple of fascinating things. So I just switched over to a weekly chart, and what you're going to notice on the weekly chart is we've only actually had, with this indicator, we've only had 3 bearish, real strong bearish bars on this, and normally we have a lot more. So on a weekly chart, we're not oversold. We actually have plenty of room. And here's the really unique one that honestly, I never look at this. I just happened to glance at it before I started the video. And well, let me rescale this. What I've done is I've switched this over to a monthly chart. Okay, so that means each candlestick represents a month. And so what you see on this chart right now is all of this data up here. In fact, I'm going to get rid of all that so it's a little bit cleaner and you don't have to see all that. All of this data right up here is just the last, several months. That every candlestick represents a month. So however many months that is, 8 or 10 months here, that shows you every month for, well, as far as it goes, but from the peak here, this is all year, all 2022 basically. And you can see what's happened with our JMAC, but this is what's really interesting. You see that red bar? That's the first time it showed up. That's the first time all year, even though we've been bearish all year, that's the first time it showed up. And what I never had noticed before, because like I say, we just have started working with this indicator, what I had never noticed before is the previous time on a monthly chart that we were bearish was actually COVID. This was in 2020, okay? And the previous time to that, there was a little sideways move in 2016 where we actually had a little signal. But the previous time to that was all the way back in 2008, 2007, 2008, right here, going into that financial crisis of 2008. And what's fascinating to me, if you watched my market update earlier in the week, I forget which day I sent it out, but if you watched it earlier in the week, you remember me talking about the parallels of 2022 and 2008. Well, guess where we said we were? We mimicked basically about right there on the 2008 model. And look what happened with your JMAC. That's when it turned bearish. That's when it turned red. And that's exactly what has happened to us right here. So on a daily chart, yes, I think we can make an argument that we might have 3 or 4, maybe even 5 days or more of a little bit of a sideways, even slightly bullish bounce. But in the overall scheme of things, there's no way. I don't say no way because it's the stock market. Anything can happen, but highly, highly improbable. I could just keep going on and on and on. Sticking with the monthly chart here, you're going to notice a couple of additional signals that have happened here. This was another continuation signal on the monthly chart. If you can see this on where I'm drawing it up here, a little bit of a stair-step pattern there as well. The big breakout in the month of September. We are, as I've been saying, September and October are historically the most bearish months of the year. We're right smack in the middle of that. But something else happened here, which has just started to really kick in, and that is all these moving averages are crossing, and we're below them. This is a huge sell signal. Now, this is happening on a monthly chart. It doesn't happen very often on a monthly chart. We've had those signals for months back on the daily chart. The daily chart, these are the signals we've been looking at and we've been trading all year. But on the monthly chart, it's brand new. And so I just find that a little bit interesting. Definitely adds credence that on the big picture, the largest fractal of the trend, the bears are very much in control, and it looks like they're gaining steam, not losing steam. About the most optimistic thing I have for you is to say, well, maybe on the daily chart, maybe we might have a few days that would be a little bit bullish, but all things considered, this is a very, very extremely bearish market. There's really no reason to be taking any kind of a bullish trade. You might take some profits from some of your bearish trades, but no reason to be taking any kind of a bullish trade at this point. Don't be that fool who's sitting here trying to pick the bottom, trying to trade counter trend. No, it's way too early in that. This bear market, in my opinion, is just getting heated up, and I think we got a lot of additional lows to put in here. So let me just go back and remind you, I know I've been saying this over and over. If you haven't watched my updates, you hadn't seen it. But if everybody's been paying attention, you've been seeing it. But I'm going to remind you, my next major target here, about 26,500 on the Dow Jones, 26,500, I've been calling that for a long time. And then 18,000 is kind of my big bottom. And if there were another level, it would be 12,000. Just so you have a reference, 18,000 is where we were at the bottom of 2020. Okay, so we got a long ways to go to get there. I think there's a good probability we will be at the 26,500 level before the end of October. I think there's a decent chance, maybe a 50-50 chance we might get all the way down to 18,000. I think there's very, very little chance that this thing, actually bounces and goes substantially higher. It is possible. I could make a little bit of an argument that we would bounce a little bit higher as part of a descending channel. But all things considered, it is a bear market, it is a full force bear market. We just went through a hurricane down in Florida. You guys know what it was like. And you guys have all seen the videos and all the damage. We are in a financial stock market hurricane right now, and the wind is getting big. We are through the eye of the storm, in my opinion, and it is about to absolutely kick it up. You're probably going to see that in the next 2 to 3 weeks here in the first part here of October. So be prepared for that. Let's look at the S&P 500 really fast. S&P is down 25.5% from the beginning of the year, and it just continues to just trudge along here. I don't have this support level written in here, but it's about 36,050. 3650. There was a support that just got broken today on Friday. The JMAC indicator is giving us very similar signals on here. I don't think I need to go through all of them. There's the weekly and the monthly. Identical signals to what you're seeing on the Dow Jones, so we don't really need to repeat that. But if you just kind of want to know some numbers here, 3,200 is the next major target. 3,200 will be a major target for S&P 500. And then kind of the big doozy one is going to be around 2,200. And again, I think, 3,200 should definitely be hit here in October, I would expect. The 2,200 level, decent chance. There's a decent chance we'll get there in October. And then the big one, the one that a lot of people are not talking about, and it bugs me that they're not talking about it, is the NASDAQ. Because the NASDAQ is down 35% basically since November. But, since the market high here, it happened in November, it happened a couple months early in the NASDAQ. NASDAQ has led the way all along the way. It is down more than the Dow, down more than the S&P. There's a ton of equity that's been lost from this index, and very few people are really talking about it, and that kind of irritates me. But what happened today is we did breach these support levels yet again, putting in lower lows, ending at the year's lows, as well as, gosh, how far do we have to go back? Probably 2020, since we were in those kind of price ranges before. Those are some of the lows from 2020. Was it the big one? No, it wasn't the big one, but we had matching lows from one of the corrections of 2020. That was in September 2020. That's the last time we were at these levels. That is a pretty darn big deal, and it's irritating me that more people are not making a big deal about it. If you want to just know really fast on my JMAC, same signals that we're seeing on the S&P and the Dow. The only exception is that on the monthly chart, which again, I don't usually put a lot of weight in, but on the monthly chart, we've actually been getting those signals for 3 months now. So where does that leave us? It leaves us with a whole lot of bearishness. And of course, that's what we've been talking about. Been talking about it since November of last year. You can go back and you can watch it. Laid out the whole case last November, laid out the case for the big picture bearish divergence, showed you why the market was coming to an end, why this bullish trend couldn't continue. We talked through the entire top at the first part of the year. As we got into January and February, we were getting into the bearish trends, and my clients have been bearish for pretty much all of 2022, except for the few that did not choose to listen. And now they are sending me emails saying I should have listened to you. Listen, it's not too late. You can still take action. You can still protect yourself, but you need to know that the bears are roaring, and it's only going to get worse, and especially as more economic data kicks in. And if you don't understand the whole philosophy of how public participation in a bear market takes place, as the mainstream media starts to finally carry this story, because they haven't been on top of it. They've been very, very slow to call it a recession, very slow to talk about the bear market. As the mainstream media starts to pick up on it, the panic selling is going to kick in. Well, we're finally hearing that. I've been sitting out on Telegram a lot of the headlines that we're seeing this week where people are finally really saying, okay, it's real. We're really in a recession. Look, it's way worse than that. I mean, there's some really, really big things that are happening economically, and you're starting to really see the outgrowth of that. Interest rates are through the roof. Housing market is about to crash. If it hasn't crashed, I mean, it's starting to crash already, but it's going to crash big time. I wouldn't be surprised to see it down at least 30, if not 50% in the next year to a year and a half. Stock market obviously coming down heavily here. And it's all at play. So there is a lot more negative economic news than what you're hearing on the TV. Take action right now. Protect yourself. Get into cash. Do whatever you need to do so that you can protect yourself from the bear market. Because, look, it's here. Storm is raging. The financial hurricane is blowing. The winds are blowing. And you got to take care of yourself. All right? So I'm trying to keep this one a little bit shorter. It's the weekend. I know you got probably ball games and other stuff to take care of. So if you haven't subscribed to my channel so far, go ahead and get yourself subscribed right here on YouTube so that you can keep up with all of my updates as well as other unique videos that I send out. I sent out quite a bit this week. I got a lot coming out the next couple of weeks here. So make sure you're subscribed so you get those notifications. And of course, check me out over at trademaestro.com so that you can get subscribed to my mailing list over there. All right. Until next time, I wish you all the best. Hope you have a wonderful weekend. Hope you have a great week. I'll get you some more market updates next week, especially as the bear market ramps up here. I'll try to keep you up to date and let you know what is going on. All right. So until then and until next time, happy trading to all of you, and we'll talk to you soon.